All right. Yesterday, we took a look at how to calculate federal income tax withholdings. Okay, for the state of Nevada, we learned how to use the circular E table. Okay, um, and how this works to calculate our federal income tax withholdings. Okay, and we also got to take a look at company FICA, right? I'm sorry, employee FICA. So what the individual employee is responsible for paying into their own Social Security and their own Medicare. Okay. And this is how we determine how much the individual is going to receive from the company, right? Salaries and wages expenses is how much that this individual person has earned overall. These are all the deductions, so all the taxes that we must take away from their paycheck. And then at the end of the day, this is how much total their check is going to be receiving from us, right? Now, again, this is just the bare minimum of a typical person that is working for us that has zero benefits and zero deductions, okay? So zero benefits meaning no extra things like, retirement benefit plans, a 401k, or, special medical or health insurance. Those are usually those typical things that a company would offer. But in this case, this is the bare minimum. This is only just federal taxes for the state of Nevada. Okay. Other states may require other, the employee to have to pay into their, other programs that are funded by the state. Okay? In this case, these are the minimum federal requirements that everybody is going to have to be able to pay. Okay? Anything extra is just going to take away from the paycheck. Okay? Now, that's all I'm going to ask you to do is just to determine at least this much, because every company is going to be different. Every company is going to have different benefits, different deductions, as well as maybe they do have state taxes that they have to pay as well. This is just looking at what the employee is responsible to pay into. Okay? So this is looking at them. Now, we have another section that we have to do, because as an employer, we also have a responsibility to pay our taxes for having employees. Okay? So what are those taxes? Okay, first tax that a company is responsible for is to match the employee's FICA. Okay, so in this case, this is our responsibility too. If they pay into their Social Security, Medicare, we must also pay as a company as well into their Social Security and Medicare as well. And it's matched up exactly. So that means if they put 6.2% in there, we must match them whatever dollar per dollar amount into their FICA as well. Okay, so the Federal Insurance Contribution Act, which is also known as Social Security and Medicare. So again, now there's no maximum cap for us putting it in there, but again, whatever the maximum cap is for the employee to put in there, we just have to match them whenever. So in this case, if they put 147,000 in there, that's exactly how much we have to as well. Okay, but Medicare, it's gonna be what do you call it? It's gonna be unlimited. Okay, so again, it's still gonna be the 6.2%, right, for Social Security, and Medicare is 1.45%. Usually, this happens. You either have it combined, or sometimes it's recognized it's separate. But in this case, for this example, we're gonna have it combined because it's company FICA. So in this case, we're going to combine the two numbers together. So 6.2% plus 1.45% gives you a grand total of 7.65%, right? And in this case, right, since we already calculated what the employee is responsible to pay into their Social Security and Medicare, all we have to do is just add those two numbers together because we already know what that amount is. We just have to, the company has to match it dollar per dollar. So in this case, if you remember from the previous example, L has earned, she worked for us for $15.25 and worked 42 hours or something like that. So then here she earned a grand total of $686.25. It's based on a gross pay, okay, before the taxes. So in this case, $686.25 is our grand total that we can be able to calculate the Social Security and Medicare, which we've already done separately in the previous one. Social Security was $42.55. Medicare was $9.95. So therefore, total FICA for the company that has to match and pay is a total of $52.50. Okay? All right. So again, they can have it separate or they can have it together. In this example, we just have it together. Okay? So it's the first tax that the company is responsible for, is to pay into the Federal Insurance Contribution Act. Match the employee 100%. Okay? Another thing that employers are responsible for is to pay into federal unemployment and state unemployment taxes. Okay? So federal unemployment tax, this is a big one because it's the federal, right? The federal is required for us to have to pay into unemployment. So it basically, this money, helps other people out for their unemployment. Okay? Now, in this case, right, the company is responsible to pay for it. Now, a lot of people, they misunderstand this. They always say, I pay into my unemployment. That's not true. The company pays into the unemployment. You only just pay with your time that you've worked there, and that's it. But again, it's not the employee's responsibility. They don't pay into their own federal unemployment or state unemployment, right? That is covered by the company. So for having an employee work for the company, they must put in at least a small portion of how much that person works, which is their time, right? And determine to pay for unemployment for both federal and, if they do have it, state. Okay, so in this case, for federal unemployment, there's a couple rules. It's on the IRS.gov publication 15 page, but they are responsible. So for every $7,000 paid to a person, it's going to be a certain percentage of tax, a certain percentage of gross pay. Now in this case, right, so that means it can be anywhere from 0.5% to 6%. So it could be very small or it could be very large. Now this is all, and then this is all based on how large your company is, how many employees you pay, and how often you pay, and how much you owe the government. So this number doesn't just come out of nowhere. It is pre-calculated, or it's predetermined. Now, I would recommend you to seek a professional tax accountant for this, because every business needs an actual professional tax accountant, right? Someone who's going to file for the IRS. So they're going to pretty much tell you what this percentage is. But for this class, I want to keep it nice, sweet, and simple, and just do the maximum amount of 6%. Okay, so once again, it's based. The federal unemployment is based. This percentage is based on how big the company is, right? So are you a small business? Are you the sole proprietor? Are you a medium-sized business, limited liability company, or are you a huge business, which is a corporation, right? And how many people, how many employees do you have? Anywhere from 10 to 1,000. And the second thing is, how often do you pay them, right? So how often you pay them is going to be determining how much money you owe. So as a smaller business, you owe less because you have less employees. So therefore, your rate would be a lot lower. But if you're a corporation that has thousands of people, right, as your employees, and let's say you pay them regularly every 2 weeks, think about 1,000 employees with all these taxes. You're going to be taxed at the highest bracket and you have to pay sooner. Okay, where smaller businesses can pay every quarterly, even they can, if it's so small where they only have 2 employees, they can pay at the end of the year. So that's the huge difference there. And how do they pay the government? They must file the form 940 or 941 or 943. One of those three forms here, but usually it's popularized notably as form 940. Okay, and that's the form where you have to fill out to the IRS with your W-2 form that you get from that. So the W-2 form, so when you file the 940, that's where you're going to receive the ending balance and then the amount that you need to owe, then the payments, and that's where you also get your the W-2s that you have to disperse to your employees. Okay, so this is important, especially for filing taxes. Okay, and again, federal tax rates is going to be based on, how large the company is. Now that's just federal. Okay, this is an obligation that you have to pay. Now, it also depends on which state that you're doing business in, okay? Because with businesses, right, certain states don't actually have state unemployment tax. In the state of Nevada, we call it SUI, S-U-I, which is State Unemployment Insurance. They're all going to be the same. They all function the same, right? They're just titled differently. But the main idea here is that state unemployment is necessary because for any reasons that we need to have state funding, right? For any agencies or, programs or training, things like that, especially for unemployment. That's exactly what this is for. State unemployment is going to be based off of, again, same criteria. How big is your business and then here's food for thought. This one is also based on how long your business has been established. Okay. Now the maximum rates that you can have is from anywhere from 0.25% to 5.4%. Okay, and there is a maximum cap. It's up to 36,600, and this is the most recent up to 2022. Okay, now again here, so I mentioned it's also based on how long your business has established. All businesses, okay, must, when they're brand spanking new, they must use 3% for the state unemployment tax, right? So this is all new businesses. So in the state of Nevada, okay, that's a rule. Okay, so that means when we take a look at our businesses and we're establishing our new business, we are automatically going to be calculating 3%. Okay, so that means for this class, that's what I'm going to teach you, is that FUTA, since we don't know we do know how the size of our company is, but Again, for practice purposes only, we're just going to keep it sweet and simple and just stick with 6%. SUTA, which is state unemployment, we're going to do 3%. Okay? Now, what are these percentages going to be calculated based on? Gross pay per individual. Okay? Because when we pay into an individual's paycheck, right, we also have to calculate for that just particular individual how much federal unemployment, how much state unemployment, as well as, remember, we must match their FICA, right? Okay, so that's the taxes that we're going to be looking at. Is they're all going to be based on gross pay. Okay? Right? Last one is going to be any other deductions, taxes. So again, if you have retirement benefit plans, so again, if you offer 401k, okay, usually the employee pays a certain percentage of their paycheck, and usually the company either pays they'll make an agreement whether they match you dollar per dollar, or they match you 50% of what you put in. So again, it just really depends, and I believe the maximum percentage you can take is anywhere from 2 to 6% that they can maximize per paycheck. So then if the employee is going to put their amount in their paycheck, then the employer has to decide, are they going to match them 100%, or are they going to match them like 50%? So in that case, if that's going to be considered something that that the company is responsible to pay into, because that's their agreement that they said, right? If for any reason they have medical, dental insurance, or things like that that they offer, right? Sometimes it could be either you have three options. The company pays for it 100%. So that means that's something that you have to consider as part of responsibility for the company. Or it could be 50-50. So if that means it's going to be a deductible to the employee. So that means the employee is going to pay a certain portion, and that means the company is going to pay the other remaining. Okay? Or the company can just simply offer the insurance, and that means that's something that the employee is going to cover themselves. Then that's responsible on the employee's check, and it has nothing to do with the company. Okay? So those are other options there as well too. Like I've mentioned, the more benefits that you put on that you offer to an employee, the more taxes that you are also subject to have to pay into for the employee as well. Okay, but another common one that we're going to be looking at is workers' compensation. Okay, workers' compensation, right? To a company, it's their ways to have some kind of protection plan for themselves, especially when a job requires some certain kind of labor that can cause to have possible injuries on the job. Okay, so if an employee gets injured on the job, right? The company's responsibility is, well, they have to be responsible because it was the job that, the task that happened. Accidents happen, but it's the company's responsibility to pay for that, because it was their responsibility to take care of their employees, and it was during the time of their operation because they were working under the company. So it's a huge liability for the company to, for example, construction workers, right? If we're a construction company, we best bet should have some kind of protection program for us to be able to keep the company responsible for all of our employees, especially when they get injured on the job. So let's say they fell down at a construction site and they broke a foot, right? Company has to be responsible for paying all the medical insurance because they got injured while working for your company, right? Now, this protection program is going to be the workers' compensation. This is just a way so that in case the employee decides to turn around and sue the company, that's what this workers' compensation is for. So in case they do sue the company, we have the money to properly pay the individual for whatever amount that they are suing for. So that's why it is important. So instead of having the employee sue the company is going to pay for all the medical assistance, all the medical attention that the employee needs. And that's where this money is going to come from, through the workers' compensation. Okay, so once again, workers' compensation is a means to protect the company from employees to sue the company for them being injured on the job. We don't want that. We don't want a lawsuit. So what we're going to do is we're going to save money on the side to pay for in case that the individual gets injured on the job. And it's 1.36%. That's just the bare minimum as of right now. Now, depending on the job, depending on how intensive, what is the criteria of what is the likelihood of a possibility of an injury. So again, for example, construction workers, that means the company is probably going to be superly heavily responsible. So that this 1.36% may not cover their medical expenses, because it's a much more dangerous job. So therefore, they might have to increase that percentage. But for example, if we just do a small local coffee shop, right, and they just accidentally burn their hand by touching the hot pots, 1.36% of their paycheck should be able to cover them enough. Okay, so 1.36%, right, is basically going to be so all of these other taxes and benefits and things is once again going to be based on either, number one, dollar per dollar contributions, or it's based on a percentage of their gross earnings, gross pay, so before taxes. So 1.36% is just what I'm going to teach you today for the bare minimum. But again, that will depend on the company that either you're working for, or whatever company. If you decided to create your own, this is what you're going to have to consider to pay. Okay? So how do we calculate all of this? So let's take a look. So here you go. Again, all of these taxes are based off of a gross earning. So again, L has earned a grand total of $686.25. So let's go ahead and calculate each one. So we talked about FICA, which is the Federal Insurance Contribution Act. Whatever the employee put in their paycheck, we must match at 100%, which we already calculated to be a total of 7.65% of the gross earnings of the $686.25, which gave us a grand total of $52.50. Okay. FUTA, the federal unemployment, is going to be 6%. So 6% of $686.25 gave us a grand total of $41.18. SUTA, which is state unemployment, which is, we already mentioned, was 3%. So 3% of $868.25 gave us a total of $20.59. And last but not least, we want to protect our employees. So we are going to learn workers' compensation for 1.36%. So 1.36% of $686.25 gave me a grand total of $9.33. So since these are called payroll tax expenses, right, whatever it is in the company is going to be just some kind of payroll taxes. These are the taxes that come through from paying to have employees. So for just having this one employee, L, This is how much we have to pay as a company into protecting or covering for L, and this is the expenses that it takes for a company to be responsible for having L as an employee. So in this case, we're going to add up all of our payroll taxes. So that means on top of the $686.25 that we have to pay L for her payroll tax expenses, as well as give her her check, we also have to be responsible for $123.60 more to pay into having L as an employee. So this is the company's responsibility. So one, to protect, to put into her unemployment, to put into the state unemployment, and to also contribute to her Social Security and Medicare. So that is the company's responsibility for having L as an employee. Okay? Any questions so far? So we have to calculate what the employee is responsible for, and then we have to calculate what the employer, the company, is responsible for. Right? Any questions? No questions?
No.
Okay. Yes?
No.
Okay. I heard someone put a hand up. Okay. All right.
Stacy saying no.
Okay. All right. So that's just for one employee, okay? So remember, think about it. When we'll take an example as well when we have other employees, but think about it. This is all for just one employee, okay? Think about having 20 employees. How much calculations do you have to do in order for you to calculate this? And it is per case scenario and it's per check, right? So not just only one person, right? It's also what their W-4 says on there as well, right? So especially for calculating federal income tax withholdings, every individual is going to either ask to withhold or they're going to say no, do not withhold anything, right? So that means per case, per scenario, meaning we got to calculate every individual based on what their criteria is and also based on how much they earn. So this is why I was mentioning to you, think about it. If one person, you have to calculate all of this plus the company's responsibility for it, thinking about having to do it for 20 employees. Heck, thinking about it for doing 100, maybe even 1,000 employees. It's a lot of calculations, and this is why a lot of companies rather pay the big bucks to some other payroll service, or maybe even some kind of company that specializes in payroll. They'd rather pay that instead of have the HR be responsible for doing all of these calculations, okay, for manual payroll. So it's always easier to pay somebody else to do it. But that's what I'm trying to say is I wanted to teach you how to do it manually so you understand how a paycheck and how many deductions are taken out, and basically how the system works when you have employees. Okay? So of course, when we have that, we talked very briefly about how to file for those federal taxes. Okay. So again, we talked about that the form 940. Well, there's much more than that. There's form 940, 941, 943, just depending on what other taxes that you're responsible for, especially for federal, okay? So again, federal unemployment, federal income tax withholdings, federal insurance contribution act. Those are all 3 to 4 or 5 different types of payments you have to pay to the federal government. They all don't go to the same place. They all go to the same place, but they all are different means of why you need to calculate different taxes for. So on the form, it usually says that by January 31st, this is just this is the assumption that when it's time to pay, you always have to pay by January 31st of that year. Now, this is to cover the previous year because what they're doing is they're based on a calendar year. Okay, they're starting to do from January 1st all the way to December 31st. So this is why taxes are so important, and that's why when by January 31st, it is the obligation by the company to disperse W-2 forms to their employees. It's because they have to file this paperwork before January 31st. Okay? And this is where they get to wrap up and calculate how much federal taxes that they've accumulated, but how much have they paid. Okay? Through by filing the 940, 941, 943, right? So again, this is the most important thing about having this done because it must be done every year, right? To see how much money you've accumulated, how much money you've paid, and et cetera, and also to get your W-2 forms from the IRS, okay? All must be done by January 31st. Right? So then, you can have your individuals file for the taxes. So that's the most important thing. There is filing those forms, and then of course your payment plans. Like I said, it's based on how big your company is, how many employees you have, and how often you have to pay them, because that's going to determine your pay frequency, which once again, this is all going to be taken care of by your tax accountant. So, but these are just responsibilities that you should assume, especially when you do have employees, because because you calculate everything, you're not obligated to have to pay right away. So that's why it's called a liability, because you owe the government money. And usually, because based on the size and how much money you owe the government will determine whether you have to pay at the end of the year, every quarterly, every month, or even every semi-weekly. Now, on the paper, it does say this, that it also depends on when your payday is as well. So, for example, if you make payments on every Wednesday, so there are companies that have their payroll where they distribute their checks on Wednesdays. You must, for every other week that you don't pay them, you must pay the federal taxes. Okay, you don't pay them on the same week as payroll. Okay, you pay them every other week, but that's just also depending on the status as well. Okay, so again, if you are a bi-weekly, then that makes sense that you pay every other week. If you are a semi-monthly, then you pay on the second week and the third week, right? Or the first week and the third week of your payroll period. Or just in this case, right, if you have not enough employees, then you have to pay annually, quarterly, or monthly. Once again, you normally pay on a week that you don't pay your employees. Why? Because that's going to give you a more accurate depiction, because if you do it the week after you paid your employees, then you've already calculated how much federal taxes you are supposed to claim between that paycheck. So that's why they want you to do that. They don't want you to pay it at the time you pay your employees. Okay? But again, like I said, depending how small or big your company is. So, for example, a company like Walmart that has a million of employees, right? They are gonna be expected to pay every week. Okay? But if you're looking at a small coffee shop business, and maybe it's a small donut shop, let's say, a mom and pop shops that has a couple employees, then they are able to either get away with paying quarterly. They could even end up paying at the end of the year. Okay? But again, you don't want to wait too long for that. You definitely want to hold your responsibilities and be able to pay the government as soon as you can. Okay, so that's why under payroll, right, for corporations that have a lot of employees, that's the number one target that the federal is going to go after, because all of those employees is going to mean it will generate a lot of federal taxes. So they're more likely to go after a corporation more often, more frequently, because of the amount of money that's being paid for the employees, right? So that's where the most money is going to come from. Where a small business, right, that only has 1 or 2 employees, the government's not going to benefit from taking money from a small company as often. So that's going to be mostly why you guys, as a small company, or depending on how the size of your company is, will determine how often you pay. Okay. So again, chapter review, we talked about payroll. We talked about there's only 2 specific employees that can be on the payroll system, right? Only common law and statutory. Okay, everybody else is just a mere expense to the company, meaning you pay them for the job that they complete, and you don't even pay them directly. You pay either some other agency or for independent contractors, yes, you just pay them right away, but they're responsible to pay into their own taxes. Okay, the company is responsible to only pay into common law and statutory employees, federal and state taxes that are required. Okay, so that's that there. And then we talked about the different forms, right? We talked about how to apply for an EIN, which is an employer identification number. We talked about filing W-2s, W-4s, 1099s, again, 940. So again, these are all forms that you can find on the irs.gov website, okay, under publication 15, okay, which is all about employees and what you need to do with them. So if you want to check out for more information, go to irs.gov/publication 15. Okay. And then under that, we talked about what employee payroll taxes are. So they're responsible to pay for their income withholdings and federal Insurance Contribution Act. Okay. Again, right here, federal income tax, right? It's based on, we've looked at the percentage method, which allows us to look at the circular E table, okay? And so on and so forth, okay? And we talked about what the federal Insurance Contribution Act, which is Social Security and Medicare, which is 6.2% for Social Security, and Medicare is 1.45%. Social Security has a max cap of $147,000 that an individual can claim up to, and that limit is as of 2022. And for Medicare, there's no amount there. Okay? And then we also talked about what the employer, so the company, is responsible for paying taxes for having employees, which is going to involve the FICA, company FICA, FUTA, SUTA, and workers' compensation. So again, we already talked about federal Insurance Contribution Act. So FUTA, right, we said that it is federal unemployment, which is responsible for anywhere from 2.25% to 6%, which in this class, keep it sweet and simple, we're going to learn it as 6%. And SUTA, which is state unemployment, can be anywhere from 0.25 to 5.4%, which in this case, we're just going to assume we're going to be a new business, so 3%. And workers' compensation, right? It's a means to protect our company. It could be 1.36%, which is what I'm going to teach you here in this class. Okay. We also talked about how to calculate the federal income tax withholdings. These are the steps. So once again, if you need help here. And these are the journals that are going to be what we need to put in our books, okay? And each individual employee we have gets each individual journal, okay? So that's why it's very, very important to know this, that all these calculations are based on a per individual basis, okay? So this is the example here for the employee's responsibility and the employer's responsibility, okay? All right, so let's go ahead and dive into the exercise, okay? Okay, for all examples and for exams and tests like that, I will provide you the table, okay? I will provide you the circular e-table so you know exactly which one. You don't have to go through that circular e-table or the publication table that has all of those tax tables. I will be providing it for you. I will provide you all information so you don't have to look for it. All you need to know is how to use it, okay? So example number 1, we have an employee, okay? We have Bob. He is a married man with 3 dependents. He files as head of household, okay? And only has one primary job, okay? He earns $19.50 per hour, and he worked a total of 72 hours this pay period, okay? And the payroll period is bi-weekly. That means he gets a paycheck every 2 weeks. That means he earns up to for working for 2 weeks, okay? Use the table below to answer the questions. So here's the table for how many pay periods there are in a payroll period. So if it's monthly, you get 12 checks. If it's semi-monthly, you get 24. Bi-weekly, you get 26. So in this case, the payroll period is bi-weekly. So that means he's gonna be able to receive 26 paychecks. Okay. Here is the tax table for the bi-weekly head of household, okay? So again, this is how much money they earned, right? And this is, let's go ahead and answer the questions like we said so we can be able to utilize this tax table, okay? Number 1, solve for Bob's federal income tax withholdings. So first, when we solve for Bob's income tax withholdings, we need to determine how much Bob has earned by determining how much gross pay he's going to get. So how much money did Bob earn this pay period? If he worked a total of 72 hours and his pay rate is $19.50. How much money has Bob earned? How much has Bob earned?
One four. 144.
Good. He's earned $1,404, okay? Now I'm going to keep it sweet and simple. Step 2 says, any other extra income? In this case, no. He's not. He filed as head of household, which is different than filing from married filing jointly. So in this case, he's filing as head of household. So therefore, there is no other extra income, and he's the only there's only one primary job. So therefore, step 2, which is going to add any other extra earnings or any other extra income, which is going to be 0, right? Okay, and then any deductions, it does not say that he has any other deductions, so deductions, so that's 0. So in this case, plus 0 minus 0 is going to give you 1404. Okay, so that means this is how much taxable income we're able to claim. So now the next step is determining how much money, or what percentage are we going to be calculating his federal income. So in this case, he's earned 1404. So column A says how much did he at least earn, and column B says but did not earn over. But so in this case, less than. So in this case, did he earn more than a $0 and but less than 746?
No.
No. Did he earn 740, at least 746, and at least 1310?
Yes.
Yes, he did, but he definitely earned more than 1310. Right? He earned 1404. So in this case, did he earn more than 1310 but less than 2890?
He earned more than 131, but and more for 2,896.
Yeah, but less than, yes. So in this case, this is the row we're going to be looking at. Okay? So again, column C is going to be what the government is going to charge tax automatically. So this is the amount that they're going to take away from the paycheck automatically. Okay? Column D is 12%. That's how much they're going to tax you on any excess money. Okay? And column E is going to tell you that the government's going to let Bob keep the 1310, and any dollar extra is going to be taxed. So in this case, we need to solve for the following, right? If Bob earned a total of 1404 and the government lets him keep 1310 without taxing, how much extra did Bob earn?
One four zero four zero four five. Oh, less 13. Oh, 1,166.
No.
Okay, 1 second. 1404. Sorry. 1404 minus 13, 10. Oh, 94.
Right. So that means that's how much money in extra that Bob has earned. Okay? Now this $94, what happens to this $94?
The government take from him.
No. That's not how much they make. This is how much he earned extra. You're going to multiply it by that 12%.
Okay. Okay. 9 or by. Okay. Or by. 11.28.
Okay? So this $11.28. Okay? That's how much, because he earned extra money, this is how much he got taxed at. Okay? Then,
Like they will take from him the tax 11.28, right?
yes,
Okay.
but there's one more thing. What about the money that they're gonna take away regardless? They're already gonna take this amount away. That's just extra, they're gonna take more. Okay? So in this case, the government's going to automatically take out $56.40 automatically. Okay? This $11.28 is extra money that they're going to take away on top of the $56.40. So how much in grand total?
Okay. 56 with 11, correct?
Mm-hmm.
56, 11, 28. Uh, 67, 68.
Okay. That is how much the federal is going to take away from his paycheck. Okay? But we're not done here. Right? We also have to go into consideration of, did he claim his dependents? Okay? Your dependents. So, let's see. He said he has 3 dependents. Okay, so in this case, he's going to claim all 3 of them. So that means on his federal, or on his W-4 form, if each child is $2,000, right? And he's claiming all 3 of them, that's a total of $6,000, right? The rule here is we need to take this amount, because this is for a whole year. We need to divide that by the number of paychecks that he's going to be receiving. So if he's on a bi-weekly payroll period, how many paychecks is he going to receive?
In the period, like twice in a month, right? If it's 2 weeks. Oh, if he is weekly?
He's bi-weekly.
Yeah.
So how many paychecks is he going to get?
4.
Bi-weekly.
Yeah, 4 weeks.
He's only working for 1 month? He's only going to be receiving... He's only going... I'm not asking you how many weeks are in a month. I'm asking you how many paychecks he's going to receive overall in 1 year.
Oh, 1 year. Okay. 1 second. 48.
Where are you looking and where are you calculating this number? He's on a bi-weekly payroll period. What does it say on the table? How many paychecks is he going to receive?
If it's 1 by 12, 4 by 12, right?
No. There's a table. Table 6 tells you how many paychecks you're going to be getting per year.
Okay, monthly, weekly. Oh, weekly, 52.
Is he on a weekly payroll period?
Yes.
How often is he getting paid?
Every week,
Where does it say he's going to get paid every week?
by week, like weekly, right?
What does it say here? The payroll period is
Bi-weekly.
bi means 2.
Oh, okay. I don't know that. So, bi-weekly, 26.
Okay, so he's going to be receiving 26 paychecks per year. This $6,000 is a grand total of how much he's going to be claiming a year. So you're going to have to figure out how much it is for each paycheck. So 6,000 because he's going to claim all 3 children. How many paychecks or how much is it going to cost per paycheck for each child?
Hello?
Yes.
Okay, sorry. I just opened my laptop because I didn't see it. So now, okay, 204,000 by 3. Okay. Yeah. Um, okay. Soon to be. Oops. Alright. So 23rd, 23, 07, 69, 231. 7692. Okay.
So $230.77,
Mm-hmm.
right? Now the rule here says that this is going to be subtracting out from the federal income tax withholdings. Okay, so in this case, you're going to take the federal income tax withholdings of 67 and 68 cents and you're going to subtract this amount of $230.77. So what do you get?
Minus 213.77. I got minus 163.9.
Okay, good. Now, the rule says on the form, if it's a negative number, if it falls below 0, this is going to mean that they're going to take $0 from his paycheck. Okay, because it's negative. You can't take away negative from the government. So in this case, we're just not going to claim anything, or we're not going to take away anything from his paycheck. We're going to take away 0. Okay?
So they don't take from him, and then the end of the year, we don't give him tax for his kids.
This is just for this paycheck.
Oh, okay.
So no,
If he make like all same. same the amount every month.
Sure. He's not gonna have any withholdings because he's claiming his children. But that doesn't mean at the end of the year he doesn't pay taxes. He's probably going to have to pay taxes. Okay, so there you go. That's that one. So because he's claiming his children, and his children add up to $230.77, the federal income tax taken away, it becomes a negative number, which we're just going to assume, well, you can't take money away from the government, so the government's not going to take anything from the paycheck. It's going to be zero.
Yes.
Okay. So the next thing that we got to do is we got to figure out Bob's federal insurance contribution act taxes, so Social Security and Medicare. What was the percentage for Social Security? What was the percentage for Social Security?
Can I see it? Okay, the Social Security is gonna be 6.2.
Okay, and it's going to be based on the gross pay. So in this case, Bob has earned $1,404. So you're going to multiply this by 6.2%. So how much Social Security is Bob going to pay into?
Yeah, 1,405 by 1.06. I got 87,048.
So what does that tell you? 5.
Yes.
Okay. What is Medicare? What percentage is Medicare?
Employee payroll. Okay. Method. Where is the Medicaid? Income.
Where did you find Social Security?
Here. Oh, Medicaid. Okay. Minus 1.45.
Not minus, it's just 1.45%.
Okay, 1.45%.
So it's based on a gross wages, once again. So you need to calculate what 1.45% is.
1.05 by 0.0145. I got 20,358. Gonna be 33.
358. So what does that tell you?
3.
358. What does that tell you?
Yeah, we're gonna be do it 4.
Your number is 358.
We rounded. Correct?
Yes, but what number are you rounding? You're not rounding to 3. You're not rounding to 30 cents.
Okay. 856.
Thank you. 856. Okay, so there you go. You got your Social Security, Medicare.
Yeah, 20.
Okay. $20 and $2.36. So how am I going to journalize this? Because I need to pay Bob.
Social Security.
No.
First of all, social tax.
No.
FISA.
No. What's the first thing you have to recognize?
Payroll.
Not payroll.
Check.
Check is going to be last. Because you have to pay him, right?
Yeah. Weekly payment.
No, you're not going to put that in there.
Okay. FITW.
FITW, what else?
And Social Security.
Social Security and Medicare, okay? What's the first thing you need to recognize?
Okay. Sellers and wage expenses.
Right? You need to pay them for what they worked. Then you gotta do the FITW, which is the federal income tax withholdings, which we just calculated, right? We also calculated Social Security. And we just calculated Medicare. Medicare. Okay, how much did Bob earn? How much money did he make in grand total for gross pay?
For the
How much did he earn in general?
gross pay.
Yes.
1404.
Okay. How much federal income tax did we calculate here?
Income tax. It was 1404. No.
That's his gross pay.
94.
No. 94 is how much extra money he's earned.
Okay. Gross income. The income. Okay. Oh, 28.
No.
Okay. What is it? Sales tax with it all. And we make this one. Gross income. Okay. So, is it the 230?
230 is how much he's claiming for each child per paycheck.
So, is it the 21512?
No.
Okay, I don't know. What is it?
We calculated the federal income tax to be $67.68, but he claimed his children for $230.
Oh, zero.
There you go.
Mm-hmm.
So there's $0 we're taking off of his federal income tax withholdings. How much Social Security is he going to pay into?
Social Security. He pay 8705.
All right, and then how much Medicare?
20.36.
So that means how much is he going to get paid?
He gonna be paid 87 with the 20, correct?
He's not getting paid $87 plus the 20 cents. No, $20. No.
Oh, we pay him, like he gonna be paid 140.04, 1,044.
That's his gross pay. That's before taxes.
So we need to calculate it, all of them.
Yes.
Okay. 1,404. Add.
Not add. Why are you adding tax to his the amount that he earned?
Okay.
Is that how you get paid?
Oh yeah, we minus it. Minus 87.05 minus 20.236. He gonna be paid 1,296.59.
That's how you calculate his portion of the payroll.
Mm-hmm.
This is how much he's going to walk away with. This is his net pay. Okay. Now let's calculate what the employer is responsible for. Since Bob worked for us and earned a total of $1,404, how much company FICA, how much Social Security and Medicare are we responsible to pay for?
Okay. Okay, solve of the company based on Bob's earning of so 0 we said.
That's federal income tax. I'm talking about FICA, the Federal Insurance Contribution Act, Social Security and Medicare. How much Social Security and Medicare does the company have to pay for having Bob as an employee?
How much?
Yes.
How can I see it?
See what?
Like how do we calculate it?
You already calculated it. What's the
Okay.
rule? If the employee puts money into their Social Security and Medicare, what is the company's responsibility to do?
To pay for him like the $20?
They have to match him, right?
Mm-hmm.
So what are they matching him for?
The $20.
That's only Medicare. How much
Okay.
else?
Okay. Like the 87 with the 20, correct?
Yes.
Okay. The 20.36 and 87. 1,700. Oh, 107.41.
Okay. So then next question is, how much federal unemployment tax is Bob going to is the company going to pay for having Bob as an employee? So in this case, how much federal unemployment tax is based off of Bob's earnings? He earned, how much did he earn?
He earned 112, 1,000.
That's not what he earned. That's after taxes.
1,404.
Okay, how much is the federal unemployment tax?
By federal, this is social security. So which one is gonna be the 025?
What did I say this class is going to be using?
Federal.
What number did I say this class is going to be using?
The 60%.
6%.
Mm-hmm.
Okay. So then, so what is 6% of 1404?
By 0.06. 842.4.
There's no way 6% of 1404 is $800.
0.4 by point 6.0. Oh, it's coming same. 84.24.
Okay. Not 800 and whatever you said, it's $84.24. Good. Now the next one. How much state unemployment? If it's based off of what Bob earned. How much state unemployment?
Colonial. Unemployment tax 3%.
3%.
So 1.05 by 0.3. 42.12.
$42.12. Okay. And of course, we're going to protect the company and protect Bob. So we're going to do workers' compensation based on Bob's earnings. What is the percentage for workers' compensation?
War. Care, employer, farmers. Where is it? Employee W2. Employee payroll. Works. Okay. 1.56 by point 1.56. I got 190944.
19.
0944.
So that's gonna tell you to keep the 9 a 9.
Mm-hmm.
Okay. So here, question number 8. Journalize the company's payroll tax liabilities for employing Bob. So what am I going to journalize here?
The first thing, we saying the expenses, estimated expenses.
What kind of expenses?
What we say, income.
Not income.
I forgot what is the name. First thing.
This is company payroll tax expenses. So what kind of expense is it?
It's payroll.
Payroll. Okay, what's the first thing we calculated?
What is called FST? FISA.
FICA. FICA.
Yeah, FICA.
Okay, how much was that?
How much you need?
How much was the FICA?
FICA 107.41.
What else do we need to, what other payroll taxes that the company is responsible for?
The Medicaid.
We already took care of Medicare.
The tax.
What taxes?
It's federal unemployment tax.
Federal unemployment tax, FUTA for short. How much was the federal unemployment?
84.24.
Okay, what else is the company responsible for?
We calculate this one and unemployment and what? Okay, state, federal, and income. Okay.
State, so SUTA for short. Okay. How much is the state gonna, how much are we gonna pay the state?
It's 42.12.
And lastly, what else did we calculate?
We calculate search for works competition.
Workers' compensation. Workers. I'm gonna do workers' comp for short. Okay. So how much was that?
19.9.
So how much payroll taxes did the company pay for having Bob as an employee?
171.41. 84.25. 42.12. 19.9. 253.67.
2
53.67.
107.41. I got 252.86.
Huh?
I got 252.86. Calculate it again.
I got 253.67. The same.
Look at this. Look at this. 1 plus 4 is 5, plus 2 is 7, plus 9, you get the 6, right? It's 16. Carry the 1 over. 1 plus 4 is 5, plus 2 is 7, 8. So you have 86 cents. So right there, that's 86 cents, right? And then you got 7 plus 4, which is 11, plus 2, which is 13, plus 9 gives you 2, 12. Carry the 1. 1 plus 8 is 9, plus 4 is 13, plus 1. Actually, let's do that again. What was it? Let me see. 7 plus 4 is 11, plus 2. Oh, I forgot to carry the 1. 1 plus 8 is 9, plus 4 is 13, plus 1, 14. I don't know. Yeah, that's right. 15. 15, carry the 1 over. 1 plus 1 is 2. I still get $252.86. I don't know where you got those extra numbers from.
It's just the calculator. I don't.
It's also the person who's punching into the calculator. Okay, you're pressing something wrong in the calculator. Okay, so that's the first example. Okay, let's do the second example here, employee. Now, you guys are on your own for this one. Susan is a single woman.
Break and come back.
Let's just finish this up and then we'll take a break after.
Okay.
Employee, you got Susan. Okay, Susan is a single woman with 0 withholdings and has 1 primary job. Okay, she earns $25 an hour and she worked a total of 38 hours this week. The payroll period is weekly. Okay, here's your weekly payroll tax table. Under for weekly, single, and this is her table. Okay, so number 1, or I'm sorry, number 9. Solve for Susan's federal income tax withholdings.
Okay, we said the tax is gonna be her. How much she make?
Well, how much did she make?
She make the first month. Okay, 20. She got $20.
She
20
earns $25.
Mhm.
And how many hours did she work?
by 38. We got 950. Okay.
This is her only job. Does she have extra income?
No.
No. Does she have any deductions?
No.
So therefore, you're going to take the 950 plus 0 minus 0. That means $950 is what she's going to get taxed at. So, using the circular E table, how much is she going to get taxed at if she earned a total of $950?
It's gonna be 10 by 10.
What is 510?
No. It's 950 we divide by 10.
Why are where did I ever teach you that? Why are you dividing by 10?
Okay, by 10, right?
Why are you multiplying by 10? What's this 10? Where did it come from?
How much the tax?
That's what you're figuring out right now. How much tax are you going to charge her?
Yeah, it's how much the percentage. It was 6, right?
No, it's not 6. This is why you're using the table to figure out what percentage you're going to you're going to calculate for her.
So how? I don't know.
How much did she earn?
She earned 950.
Okay, use the table.
Oh, okay. Oh, okay. She got 950. It's gonna be the last table, 35, correct?
No. Did she earn? How much did she make?
She make 950.
Okay, so use the table. Letter A says how much did she earn? Letter A says she earned at least this much, but she earned less than. So where are you plugging that number in?
Okay. It's gonna be a 3, 3, 5. Okay. No. 1,000. Okay. Oh, okay. 447 and 1052.
Okay, good. So you recognize this is her table. So how much is she going to get taxed at?
By 12.
What is that 12% from?
It's last percentage.
Okay, so in this case, all right, so now that we have our row, okay, what do you need to calculate first before you use that 12%?
Uh,
How much did the government let you keep?
447
Okay, so where are you subtracting that 447 from?
from the 950.
Good.
950 minus 447. We got 503.
Okay?
So now the tax.
What are you gonna do that with that $503?
We do it by 12.
Okay.
Uh, 12. I got 636.
Okay?
Uh, Now minus 0, 0, right?
No.
Because
No.
uh,
What about the money that the government's gonna take from you no matter what?
uh, the tax,
Yes, but the government's gonna take money from you no matter how much money you make. What is that amount?
the $60.
That's the money, that's the extra money. Look at the table. What is column C?
Okay, 19.8.
Okay, what are you gonna do with that number?
60.36. Add 19.80. We got 80.16.
Okay? Did she claim any children?
No.
No. That means it's 0. So if she didn't claim any children, then what's her total going to be? What's her total federal income tax withholdings if she didn't claim her children?
80.16
Good.
minus 0.
Which is?
80.16.
Okay. So that means because she claimed nothing, she's a single woman, she's gonna claim nothing. That means she is gonna be taxed for federal income tax for 8016. Okay.
Yeah.
What about her Social Security and Medicare?
We need to calculate the Social Security.
Yes.
Okay.
How much did she earn?
She earned 950
Okay.
by 6%, right?
6 point.
Yeah.
There's a point there.
6 point, how much? I forgot.
6.2%.
Yeah. 2%. 58.9.
Okay. Okay. How much Medicare?
We minus from 950
Not minus.
by
What percentage is social is Medicare?
6%.
No, it's not.
How much it was? Medicaid, social Medicaid. Oh, 1.45. 1.45. 1.45. 13,775.
So what does that tell you?
7 7. Okay, 7 8.
Okay, 1378. Okay. So let's go ahead and figure out how much we're gonna pay Susan.
Yeah.
So how am I going? What's the first thing you recognize?
Social Security.
No,
PayPal.
not payroll.
Expenses.
What kind of expense?
Income.
Not income.
Um, I forgot what it's the first word. Serious.
Salaries.
Salary. Wage. Expense.
Okay.
Okay.
What are the taxes that she has to pay?
Tax. Income tax.
Income tax, so federal income tax withholdings. What else?
Medicaid.
Medicare. Medicaid estate. And what else?
Check.
There, you're missing one.
Okay. Check and Medicaid. Federal tax. Income tax. Okay. Unemployment.
No, that's not a employee's responsibility to pay in their unemployment.
Oh. Medicaid and this one. Social Security.
Good. Okay. So how much did she make?
She make 950.
Okay. How much Social Security or how much federal income tax withholdings did we calculate?
Okay, we got 80.16.
How much Social Security?
She pay for Social Security 58.90. So 80.16.
Okay. And how much Medicare?
Medicare is 13.78. 13.
So how much is her check going to be?
152.84. This is what we take from her, and we minus this amount from the 950. 950. Oh no, what happened here? 950 minus 80.16 minus 58.90 minus 13.78. I got 869 point. This one, the point is I got wrong.
Okay, then recalculate it.
950 minus 80.16 minus 58.90 minus 13.78. Okay, 8691.16.
No.
Oh, 869.
Where are you getting 869?
We minus the 80 and 58 and 13 from the 95, 90, yeah, correct?
Yes.
Okay, this is what I did. 950 minus 80.16 minus 58.90 minus 13.78. Oh, I got 797.60.
There you go. Okay, that's her check. So let's do the last section here, the employer. So the employer, right? We have to solve for the company FICA, so Social Security, Medicare. So what was the total here for this Social Security and Medicare?
950
No,
by, huh? Oh, is it the 797 by 6?
no. You already solved for FICA from the previous ones. It's Social Security and Medicare. What is the total of Social Security?
Oh, we got all of them, 80 and 58.
No, that's the federal income tax withholding. I'm talking about Social Security and Medicare.
Okay, 58, 90, add 13.78, 72.68.
7268.
Uh-huh.
Okay. How much is the state unemployment?
State unemployment, it's how much we gave her?
What do you mean, how much did we give her?
It's like the point.
You tell me.
Unemployment. Oh, 797.
No, this is based on gross pay, not net pay. Net pay is after taxes.
After tax or before?
It's gross.
Okay. 950 by 6%.
6%, good.
Okay. Times 6. 57.
Okay, what is state unemployment?
The state federal unemployment was 1 point something, right?
No,
How much it was? 950 by 0. Okay. Is it 1.3?
no.
We have 6% and we have 1.3.
Mm,
3.
It's just 3% good.
Yeah. 28.5.
Okay, and then workers' compensation.
This is the 1 point.
Yes.
Okay, 950. Okay, by 0. 0.01.
One what?
90. Huh?
One.
20.
What's the percentage?
1.
1 point what?
1.3, right?
3.6.
Okay. Now it's 950 by 12.92.
Okay, so then what do I need to do? How do I journalize the company's portion of the payroll tax liabilities?
It's we said salary.
Not salaries.
Oh, now the company
Uh-huh.
payroll.
Payroll.
Mhm.
Okay. What is the company responsible to pay?
Company responsible to pay it's Medicaid and insurance. Unemployment.
Which one?
Uh, Unemployment.
There's two different unemployments. Which one are they?
It's okay.
There's two unemployment taxes that the company's responsible for.
Okay, I forgot the name. Unemployment. Unemployment tax based on cents. Okay. And work. Okay, FISA.
No. You ask me for unemployment. There's
Yeah,
two
unemployment tax.
unemployment. What are they? There's two
Federal.
of them. Federal.
Yeah.
Okay, federal and what else?
Federal and unemployment and works.
There's another unemployment tax. What is it? You got to pay the federal, which is national, right? What else do you have to pay?
Estate.
You have to pay state unemployment. And workers' compensation. Okay, so in this case, how much FICA?
Okay. It's he earned 797.
No, that's gross pay. How
Why?
much FICA did the company have to pay?
Okay, we need to add the 72, 57,
72.
72 point 68
Okay.
and
Nope, that's it. 7268 is the company FICA. What is how much federal unemployment?
federal unemployment. It's 57.
Okay, 57. How much state unemployment?
Okay, state. Okay, state 28.50.
And then last but not least, how much workers' compensation?
Work 12.92.
Okay. So, how much in
One
grand total taxes does the company have to pay?
171.1.
171.10. Good. Okay. That's it. Okay. That's it for this lesson, for this exercise. Okay. So I'm gonna stop here.